The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 16th terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check on the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know I'm absolutely grateful for your presence here, and most importantly, I'm here to serve you. So feel free to pick up that phone. Yep, you can dial in right now, 877-927-6648. If you can't dial in, let those fingers do the walking. You can always send me an email, steve@tfnn.com. Inside the subject heading, if you'd be kind enough to put radio show question, and in the Tiger's Den, well, any ping will do you. So let's go get started on this terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow 400 points, trade on 25,643. The S&P's up 43. The NASDAQ up 156. The Russell's up 30. So it's mean and green across the board, anywhere from about 1.5% to 2.5%. The 2.5%er would be the semis. Are up 30 points out there. You've got the spot volatility index off minus 14%. Trade out at 1826. It has much further to go. I think into the 14s is the target. Gold's up $2, trading at 1232. Gold is trying to take out the resistance of its weekly profile level. If it can do that between now and Friday, and certainly close above that on Friday, that will be uber bullish. Silver is flat right now, so it's tired. It knows that it's got to take on that battle, and it's going to do everything in its power to do so. Light sweet crude is up 23 cents. Trade out at 72.01. The leaders in the clubhouse. Yep, they're in the clubhouse, and they haven't even played 18 holes, but they're in the clubhouse. Amazon up $38, Google's up 26, Adobe up 19, Booking Holdings up 18, Regeneron up 18, Intuitive Surgical up 18, and we've got some big losers to the downside. Grainger Worldwide is off $42 or 13%. AutoZone not in the zone, it's off $24 or 3%. BlackRock off 18. Domino's Pizza down nearly 6% or $15 out there. So there's movers and there's shakers out there. So where are we going to start? No questions that I see either in the den or by email or certainly by phone. So let's just take a tour. I'm sure everybody wants to know, hey, what are the markets doing? Steve-O, get it. Have we bottomed? Steve-O, I think that's the question. Let's just go look at the evidence that we have, and then you get to make the decision out here. So we did this, I think, a couple of days ago. Last week we did it one of the days, and we said Thursday or Friday or Wednesday out there, and we said, what do we know just simply about the markets? Let's just get rid of all the emotion if we can, and what do we know as students of the markets, right? And one of those things that we know is when we take a look at the average seasonal cycle, this is the last 86 years worth of data, so it's pretty good. We know that the Dow, and this is taking a look at the Dow, obviously, or maybe it's not obvious, but if this is of the Dow, what we know is there's 3 times of the year when the Dow makes its significant bottoms, or certainly very tradable bottoms. The end of January, early February. The middle to late, really more towards the 3rd week of June to July 4th, and then the middle of October. Today is October 16th. Okay, so we know that. There was a question that was posed last week when I had shared this with you. I've shared this with you many times, so it's not anything new out there. And somebody had asked a question, oh, but Steve-O. Wait, oh, but Steve-O. Even though they didn't say that, I was just kind of embellishing it. But the question was, hey, what about these midterm cycle years, right? The midterm election cycle years. You know who you were. I don't remember who you were. But it was a great question. I didn't have the exact data at my fingertips, and so early this morning, I went in and dug it out. It wasn't that tough to do, and here's the midterm election cycle. This, too, over the last 86 years, so since 1934, basically, is what we're taking a look at out here. And what you can see in the lower right is that during the midterm elections, the Dow bottoms right around now, or actually just a tad earlier. So from a cycle standpoint, to the extent that you believe in tides going out and tides coming in and all that type of stuff, well, the tide is now going back out. Whether it's an election cycle year or whether it's just the annual cycle year out there. And if you don't think it works, if you just think Stevie was just pulling out the willy-nillys or something like that, whatever that means out there, if we just take a look at the Dow's chart, if we just take a look at the Dow's chart here, just going back to 2014, kind of go from left to right out there, you'll see on October 15, 2014, the Dow did what? It bottomed. If you take a look at another bottom that came in February 3rd, end of January, early February. Was there another bottom during that consolidation year? Yes, July 6th. Fast forward to the following year in 2015. It wasn't October 15th. It happened September 29th. Take a look at the next bottom that took place out here. It took place at the end of January, January 20th to February 11th. There was it was basically a double test of a bottom out there in 2016. You saw a bottom in June 27, 2016. We didn't get the October bottom. We got one on November 4th. Still pretty darn good. We get one January 19, 2017, June 29, 2017, September 25th, 2017, in a year that would just simply move into the upside. But right around the dates where you would anticipate that a bottom would form, that's what took place inside of the markets. Take about this year, 2018. You don't care about all those other years, do you? Well, this year, we get a bottom February 9th, 2018, basically right on schedule. We get one on June 28th. June 25th, I think, was a Saturday or something like that, right? So, and now we get one October 12th. We get one on Friday. So I don't know. You tell me the roadmap that the Dow seems to be following based upon midterm election cycles and or just annual seasonal cycles. So it's just one piece of information for you to think about. So let's take a look at, because there are several things for you and I to go take a look at out here. Let's take a look at what do you want to look at next? Let's take a look at the New York Stock Exchange, just kind of peek in on it, see what it is doing. Now today, the advanced decline oscillator reading, just to give you a feel for the market breadth out there, because I know somebody is going to trash the New York Stock Exchange, and we're not going to let them trash it. Because what I can tell you at 1:14 in the afternoon, this is one heck of an acceleration move off of the low last week. It's almost up to zero. It can't get to zero today. It's numerically impossible. We'll talk about that when we get back from this break. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we know as we enter this fall time period that the Dow forms a bottom right around the middle of October, and it did it this time, at least at this stage of the game. Did it right on target. I mean, right on target. I mean, to the day, which is uncanny. But that's neither here nor there. We had a bunch of other tools and indicators that were saying, yeah, at least you're going to get a bounce, right? Well, if you take a look at the New York Stock Exchange, that's a chart that's up on the screen right now. The center portion of that screen is the advanced decline oscillator reading. For those of you that don't know what that is, it's the difference between two exponential moving averages, the 39 and the 19. Why those moving averages? Because it really is rocket science. The guy who basically should be grandfathered, who invented, who developed the exponential moving averages out there was a rocket scientist. He used to run the Jet Propulsion Laboratory, and by day he kept those satellites. He used what he called trends, which now we call exponential moving averages. Peter Harlan is the guy's name, and he wrote a newsletter too for a while, and he was one of the few guys who had access to about what was a powerful computer back then. And so by day he did that, and by night he hacked away at that computer and created some tools for being able to track the stock market and what it wants to do. And if we apply this to the net advancing issues inside of the New York Stock Exchange, that's what we get. That's that oscillator reading. When it gets down to minus 250, which we got down below minus 250, it's kind of like if you ever jump in a pool with one of those big, balls, the kind that you blow up, whatever kind of ball, and try and hold that thing down there, with your hands, or try to do it with your feet. Eventually, what's going to happen? Yeah, you're going to give way. That ball's going to pop up, and usually going to pop up pretty good. Now, what we want to really be able to do is now going from the minus 250 is really measure that market breadth. Now, we need a 2,610 net advancing issues today I know right to the T how many we needed in order to be able to get that advanced decline oscillator reading up to 0. It's not impossible, but it requires there's just like about 3,000 or so issues inside of the New York Stock Exchange. And a lot of those are closed-end bond funds and other things. But if we do take a look at where we're at in the advanced decline, we have 2,469 net advancing issues, or advancing, not net, 2,470 advancing issues and 473 declining. And we do have some unchanged issues in there. Even if we got all 472 to switch over to the advancing side, it's not going to get us up to the 2610. So we're not going to get up to 0. Why is that important? Well, it's not important that it doesn't get up to 0 today. What's important is what happens as it does get to 0. Does it overtake 0? Does it close above 0? Because if it closes above 0, for those of you that are thinking that this is just a counter trend rally, well, I've got news for you. There's more counter in that trend. Because once that level gets above 0, and it's not the first day. Like everything in life, you have to have follow through. You want to say something, you better follow it up with some action out there. You better be Action Jackson. Well, same thing with regard to the advanced decline oscillator reading. So what you and I want to be paying attention to over the course of the next several days out here is how does the advanced decline oscillator reading handle that 0 level out there? Now, the other thing that is of interest to me is, as you can see, huge market breadth day inside the New York Stock Exchange. And we have come off of this bottom. Yeah, I mean, you can just take a look at it. We've come off of this bottom with force. If there is additional follow through over the next couple of days, we could get one of Marty Zweig's Zweig thrust breadth indicator. I just like saying that. I'll track that. I always track that. We haven't had one for a long time. But they are a real indication that you're going back to the highs and more should that occur. Don't know if it's going to occur. I just know we need to be watching it, especially because of the market breadth that we have today. So we're not, and what happens if it turns down at or near 0? Well, that would be a bad thing. That would be telling you, okay, to forget about perhaps the annual seasonal cycle and the midterm election cycle. This could be the counter trend rally out there. So we know what to be paying attention to. We take a look at the wide swath of the market breadth out there. We also know and take a look at the equity futures contracts, what to pay attention to. Now, there are new profiles that have formed. I don't know how solid they are. These could change, but we want to watch these as well. And if we take a look at, these are daily profiles. If we take a look at the ES Mini, the level to be watching is 2813. I think my good friend, my favorite polar bear out there, he's looking for the S&P to get up into that range area, at least for the move out here. So what Polar and I know is that if price is able to take out this level of resistance, 2813, I'm not talking today. It could be today. It doesn't matter whether it's today. It just matters whether or not. That's where the shooters are. Okay, that is where the sellers are inside of the market, inside the ES Mini at 2813. Now, the interesting thing about that is that if we take a look at the market profile for the NASDAQ, the top of its box is 75.44. I mean, we're not even halfway there. So the ES Mini may give us some type of indication. The Dow's top of its box is 25,814. The Russell, the bottom of its daily profile, 1606. Again, these profiles here, the NASDAQ is the one that is probably the one that is most reliable right now. The other ones have just formed, and I've seen where these things can kind of go away over the course of the day. But those are levels of resistance for everybody to be focused on and paying attention to. Okay, what else do we need to take a look at? Oh, well, let's go take a look at the spot volatility index out here. Now, I don't know where we're going to end up the day. Right now, at 1:24 in the afternoon, the reading is a one-day rate of change of minus 14.93%, give or take out there. And what this tells us, if you are at minus 10% or lower, I don't know how you say that really in vernacular out there, but hopefully that's it. But when you are at minus 10% or lower than that, what that does for you and I is it generates what's called an initiation move signal. Now, is that important? Well, I can guarantee you it's giganto important when you're coming off of a bottom out here. We had initiation move signal 2 days ago. On Friday, what the spot volatility index did was generated an initiation signal. Also happened to be a shooting star candle. We're not looking at the candle right now, but that's the bearish of the, it's the brother of the, or sister of the hammer candle, and we have seen follow through on that. Now, why does that matter? Well, now we've got 2 initiation moves inside of the S&P 500 off of that bottom out there. And the spot volatility index is not done going lower. What do you mean, jelly bean? Well, we'll come back to the New York Stock Exchange chart out here, and what we're going to see is the 50-day exponential moving average is right now priced at 1469. The spot volatility index is going down to tag that level, tag or move below it. You get below it, and liquidity will be just plentiful inside of the market. You know, I haven't checked on the HYG just for the heck of it. This thing should be going up. Oh, and it is. So the high yield bond fund has also bottomed, which tells you there is plenty of liquidity in the market. It's the reason why we're seeing such a large advanced decline line move inside the New York Stock Exchange. Don't think that this is just a counter trend rally. There's not much evidence to support that, folks. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So I was just asking a really good question here. Is what's the difference between today's action and the action that we saw at the end of July, early February inside of the markets? And I'm just going to be able to focus on New York Stock Exchange. And when we came off of those lows out here, let's come back to New York Stock Exchange. I have to look at two different screens, but we're coming back here. We can see that the advanced decline oscillator reading was relatively low, got down below the minus 250 level. But the market breadth as we came off of that wasn't what we've seen today. And what we didn't do is we got up to the zero line right around February 15th. And then we can see that it backed off, never got below zero. So it was just a retracement out here. And so it's going to be that market breadth. And so the question is, and again, I don't know where the spot volatility index finishes today. I suspect it's going to be below minus 10%. You're going to get a second initiation day signal. And what that could do is that could set up another strong market breadth day. Now, look, there's a lot of trading left. All these gains could be wiped out in one tweet or something like that. But everything is falling into place as it should as we speak right now. So the only way to really answer that question is to continue to monitor the technicals out here. We know what to look for. And if market breadth remains strong, we get one of those wide thrust indicators out there, then the Santa Claus rally began on Friday. It's really just that simple. At least it's just that simple for a simple-minded guy like myself out there. Let's take a question that came in out here. I mean, there's more. We can spend more time looking at stuff, but look, if you spend time to write, we're going to go ahead and make sure we answer that question. So this one comes in from JJ. JJ wants to take a look at Amazon. AMZ, and then we'll go take a look and see what his actual question is. But this way I can at least fire it up on my charts, AMZN. And hi, Steve. Has Amazon bottomed? How does it look longer term? So in the case of Amazon, let's put up this chart here and see if there was any tool that we could have used. And there was. And I think when we looked at this, we were noticing, I don't think we've looked at it for a few days, James, but one of the things that we noticed as price was moving down October 11th and then we had October 12th was that it was very likely that what Amazon was going to do was make a time to mark setup 9 count out here. And in fact, it did that with that nice little hammer candle on the 12th, on Friday. Yesterday, the low of that hammer candle was tested, so you know that's support. Tested and rejected. And now what Amazon is going to do is going to, or should at least, bounce up to Stevie's red line. And Stevie's red line is 1846. Now, James, we won't know if it's bottomed, so to speak, until we see how price takes on Stevie's red line. You see, Stevie's green line turned red, and it did that on October the 11th. And what that tells you and I is the price oscillator gets to zero. We just talked about an oscillator inside the New York Stock Exchange. Well, this is a price oscillator. So instead of looking at advanced decline data, we're now taking a look at price out here. And it's the difference between the 39 and the 19-day exponential moving average out here. So same kind of tool, just a different look. But what we know about the pattern, the phenomena associated with getting to zero is typically, not always, but typically, what happens is you get a test of price and that line. So, JJ, I think what we're going to see is that test unfold. If price is able to overtake the red line right now at 1846, then you have your answer. It has returned bullish. If price just moves up there, that's just the counter trend rally when you take a look at Amazon. If we look at their TAS market profiles, slightly bullish because today you're above the top of the box at 1776 on the daily time frame. That just kind of confirms for you and I that, yeah, you're going to go test or should test that red line area. If we take a look at the weekly, it's just dealing with the bottom of that weekly profile, slightly closed under last week. We really won't know till the end of the week. So I think to answer that question out there, because we didn't really see any bullish signals. Today's the only bullish candle. Well, I take that right. We saw a hammer candle. What am I talking about? So I still think you have $40 in it at least. If it overtakes that line, then the answer to your question would be yes, it has L bottomed out there. So I hope that helps you out. Thanks for writing in. Earl writes in, and Earl says, hi, Steve. If the bottom has been made on this pullback, do the indices go to new highs this year? You know, it's a great question out there. Do they go to new highs? I think what we have to go with, Earl, is the information that we know. And the information that we know, whether it is the annual seasonal cycle or we take a look at the midterm cycle out here, is that when that Santa Claus rally arrives, which is always the middle of October, unlike what the media will tell you out there, which is it's just like I want to take two guns, stick them in my head, and blow my brains out when I eventually hear them talk about the Santa Claus rally right before Christmas, and you're kind of like, hello, what happened between the middle of October and getting all the way up here? So, I does it take out its highs? It'll take out its highs if we really start to see continued participation from around the globe. Remember, money is flowing in one area, Earl, period. Hook, line, and sinker, and that is inside the U.S. stock market. Here's the Dow, just 5-hour charts, priced in euros, yen, pounds, and U.S. dollars. Of course, everything's moving higher, but you can't say of course, because you don't know what's really going on with regard to the currency in those other denominations out there. So we'll just have to continue to watch this, how it plays out. Typically, when we take a look at the New York Stock Exchange and it forms those significant bottoms, we end up, I would have to say, yeah. If you take a look at the New York Stock Exchange, just based on closing prices, what do we know about it? You can see, at least the bottom of the consolidation, right? I mean, it kind of hit it, in essence, right to the T. If we just put a yellow line based on closing prices across, you can look at, if you just come to May 3rd, if you take a look at then May 29th, if you take a look at June 26th, now you take a look at this past week out there. You can't bust it down. It should be headed back up towards its highs out there, and that's just the New York Stock Exchange. So we don't need to get ahead of ourselves, Earl. We can start monitoring this stuff one day at a time. As of 1:37 in the afternoon, the information is as you and I are taking a look at it. If it changes at 4 o'clock, then we have to change the tune, because the market will have been the one that says, hey, you've got to change that tune out there. So we know what to look for over the coming days. We know where there's resistance levels. So that will give you and I some signals out there, both whether you're a bull or you're a bear. If we take a look at Goldilocks as another example, pure gold is struggling. It's doing pretty good in all of the major currencies. Just waiting for gold and U.S. dollars to say, I want to take out resistance. It's 1233.80. You see, these market profiles, they really are pretty good. In fact, what we haven't talked about, and Earl, what we can also take a look at is really the market breadth inside of the TAS market profile system, which on the daily basis for the S&P and the NASDAQ are still bearish, but it's a lagging indicator. It's bullish on the other time frames, meaning the 240 and the 60-minute out there. So let's just take this one step at a time. And let me tell you the story of what the market is telling you and I. I'm the narrator during this hour. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Path's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Dow's up 456, S&P 50, NASDAQ 100 up 175. So, types of things that we'll be watching for overnight, I suppose. Really what we're watching for right now. If we come back, take a look at the NQ. Nick is liking the NQ and the Tigers Den. So Nick, what we probably should do is just take a look at, hey, what's going on inside it. If we look at a 1 hour time frame chart, you can see that price has made its way back to its Tom DeMark setup trend line. That's that little green dashed line out here. Now it's right around where we're trading. The exact number is from the candle session. This is on a 60-minute basis. It's 72.6250. And the question is this going to act as a resistance level here at about 143? Nick, if it takes that out, that would be real bullish, because this should be a level of resistance right where we're at right now. Doesn't mean that the move is over. It just means we're at a level of possible resistance. And take a look at the hourly time frame chart. So the nice thing here is you now have a little tool to be able to help determine, because if price moves over that, boy, it's a very strong bullish move. I'm not here to tell you which way it's going to resolve itself, but if it does, move over it, then we can just go out to the 2 hour time frame chart out here. We can take a look at the A to B equals CD pattern that's underway. We could have done that in a 60-minute. It's just a little bit easier to visually see it here. And this would give us a price projection in the 73.50 as the one-to-one A to B equals CD. And what we're going to have to watch out there, both bulls and bears, is that above that level is the 2 hour time frame Tom DeMark setup trend line. So if price is able to take over that 60-minute level, then what we would do is we would switch our views to the 2 hour time frame, and we take a look at how that Tom DeMark set up at the 74.12 level, which is, right around an A to B equals CD completion area, which would be or could be a Gartley sell pattern. So you just have to watch as price gets up into those levels out there. But at least now you have a guideline, and I'm not saying it has to do it today. It doesn't have to do all this work in one day, but at least you know what to be looking for to give you additional signals as to what's going on. And then we can go from here. And, this is where when Earl says, hey, if this was a bottom, do we go back to the highs? I say if this was the bottom, the market ends up moving higher into the end of December. I mean, it's just the seasonal cycle. It's just the normal cycle out there. With regard to, is it a low? Everything that we've taken a look at, it's not stuff I put together to try to prove a point out there. But if we just take a look at the best signals in 2018 and identifying a bottom out there, it is the Rhodes Momentum Indicator signal, and it is on the 5-hour time frame, and it is for the NQ out there, and those are those black arrows. And we had one of those form last week on Friday morning out here. Yeah. And so, you know, we've at least got a Gartley, an A to B equals CD to the upside, possibly a Gartley sell pattern that would be forming out there. That just means it could just be a 0.382 or 0.618 retracement of this move that we're having right now. So we just have to take things one moment at a time. And that, in essence, is what I will do with you each and every day. Hey, and then if we switch to the daily time frame chart, really just to kind of cap this thing off, to provide us with the information, just like we were looking at Amazon and it being able to get up to Stevie's red line. Well, that's the weekly chart. We looked at the weekly chart yesterday for the NQ. I meant to really pull over the daily time frame chart so we can see where Stevie's red line is here, and that is at 73.1096. So very similar to what you and I looked at for Amazon. Same kind of pattern that would be unfolding in 73.10-ish is going to be that level. If it's able to overtake that area, then we probably do see price head up to 75.44 inside the NQ, which is the top of its daily box out there. So that's kind of the overview as I see at least the NQ out there. No other questions I see that are on deck. We kind of covered gold out there, I believe. And let me see if there is any questions out there. I just want to kind of tackle what it is you need me to tackle out there. Oh, here we go. We've got a couple questions. So PK writes in and says, what sectors have the strongest sign of bottom, or which stock seems strongest per your system? Thanks. Well, PK, I'd have to go through. So I started, well, I'll tell you what I did this morning. I started going through the current IBD 50 stocks out there, Pradeep, looking and say, okay, if we really got some nice momentum that's going on here, which of those stocks looked the best out there? And the interesting thing is there weren't a lot as of about 10:30, between 10:30 and 11:30 or noon when I was working on that, although the big cap stocks actually were. So let me see here. Well, let me do this. Let me see if I can open up the IBD 50 big cap. It'll take just a moment for my system to go ahead and put that information up here, but I think I can probably fill the time. So this is the black box tool, Stevie's black box tool, and this happens to be, for those of you that pay attention to the IBD, they've got the IBD 50, which is the real momentum-based stocks out there, and then they've begun putting together something that they call the IBD Big Cap 20. And so what I would suggest, Pradeep, I can say take a look at these stocks because these actually look really pretty good. For example, you could go take a look at Boston Scientific. On a daily basis, and this is occurring today, this is telling me this is in a breakout bull mode. What that means, PK, is that price is above resistance. On a weekly basis, it's bullish. On the monthly basis, it's a breakout bull. If you want to know where support is, it's at 37.91 and 37.95. We don't even have to go check at the charts out here. It's trading at 38.09. The black box system tells me exactly. This says the next best one out here, be WellCare Health, WCG, breakout bull inside the daily, breakout bull in the weekly, breakout bull in the monthly. So if you're looking for some real momentum, now you were asking me about stocks that bottomed. I don't have any stocks here inside this top 20 that actually pulled back to create a bottom signal for us. But to the extent you want to go ahead and take a look at some stocks that are just simply running to the upside, you like to take a look at, or I suggest that you take a look at those stocks that are just truly in a breakout bull mode. And those would be two of them. There are plenty that are consolidating. They're trading in between profiles like Advanced Micro, IAC Interactive. There's nothing bearish about those stocks. IQV holdings. But what we can see in taking a look at the big cap 20 stocks out here is they look pretty good. So I hope that helps you out with regard to your question. That's the best I could do quickly on the fly. So when we come back from this breakout here, we'll go finish this off for John in Sarasota. He, I believe, wants to go take a look at sugarcane. CANE is the ticker symbol. I don't know what that is, the sugar fund. So we'd probably want to know what contracts are inside of the Tecrium Cane ETF. I'm guessing it would be March 2019. And so we'd want to go take a look at that futures contract. So, John, let's try to do that when we get back from this break.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So, John, what I've got up on my screen is the Tecrium Sugar Fund, CANE. And and your question was, does CANE have more upside potential? And the only way that you and I can really answer that would be to take a look at what the underlying instruments are inside here. And yes, it does have the March 2019, the active contract inside there, but that only represents 1/3 of the value of the fund, give or take. There's about 18 million dollars of market value inside of Yeah, of this, and 6.4 is the March contract. You also need to know what's going on with the July 2019 contract and the March 2020 contract. That's what's in there. I can't get all that work done for you in the next minute. What we can do, though, is at least take a look at what's going on with regard to Kane on the March 2019. We can see it's above resistance on the daily, so that says it wants to move higher. We can see it's above resistance on the weekly. It looks like this has more upside potential in this contract. It may find some resistance right here. We'll take a look at it. Right at I'm not looking at Kane. I'm looking at the sugar contract. That's more important because you just need to know what's going on with the underlying instrument. So 1394 with regard to sugar, maybe that's a place that could be a place of resistance. That's a 100% move. If price can get above that, then you've got much higher to run. Now you're back in the 1661 type level. If I take a look at the see if I can pull up the March 2020 contract out here, March 2020, it's really right at the resistance level in essence of the May 28th area for 2018, but this looks pretty bullish to me out here, and so it does look to me like sugar cane, so to speak, which is what you are trading, wants to move higher. But if I were to give you information based on this set of charts out here, it doesn't look really good. But the futures contract looks very promising. I hope that provides you with a bright future inside of Kane. Thanks for being here, folks. Stay tuned. Your favorite polar bear, David White. He's up next. Tom O'Brien, 3 to 5. I'll be back with you on Wonderful Wednesday. We'll see what the markets give us for the rest of the day. Until tomorrow. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report.